What's up, guys? Happy Sunday. There's a lot to talk about in today's video. The 30-year bond is overextended to the downside. The dollar is overextended to the upside. The equities are at major support. Bitcoin also overextended to the downside. So in today's video, lots of stuff to talk about. So let's get started. So number one, this is the ES, which is the S&P 500 futures. And this is a 4-hour chart. So currently I put a Bollinger Band on this as well. So what we can see here is that the ES is currently at major trendline support for a falling wedge. Falling wedge patterns are one of the most bullish, explosive patterns to the upside. So what we see is, obviously I extended all of the lines to the right. So they're going to not look as clean, right? But the point, what I'm trying to make here is, there are multiple layers of support with multiple different trend lines being created. And the ES is basically testing this first middle layer of this downward channel of support. And you can see that we've been wicking off of these levels as well. Essentially, this 4,200 level on the ES is acting as clear support on the 4-hour. The overall momentum of the entire market is very, very bearish. Right? But as we become very, very bearish, once you get to a major level of support like we have, it becomes not intelligent to try to short this strength with heavy buying pressure. Or, you don't want to short with buying power, right? You want to, essentially what this is going on right now is, if you were to try to short alongside momentum, you would have to enter with a smaller position, because the odds of us continuing to break below major levels of support, especially if you're entering at support and you're bearish, you have to go in with lighter position sizes, because usually what ends up happening is, when we're at support, we bounce a bit. It gives bears a better opportunity to re-enter shorts at levels of resistance. People that are entering shorts at levels of support usually end up losing money, because they rip it back up for bears to re-enter shorts at a cheaper price. So overall, just very, very plainly, since we are at this level of support, we should be trying to, in my opinion, what I would be looking for is bounces to levels of resistance at the very least. Right? If this breaks, then we're going to come back and retest this lower trend line channel here, which is basically at 4,200. So basically 422 doesn't really hold. Then 420 is going to be the major level of support on the ES. But so far we can see that on the 4-hour, the MACD is extremely oversold. The RSI is now getting extremely oversold as well. We're trading outside of the lower level of the Bollinger Band, and we're sitting at support. So this is a good solid setup on paper for a bounce to the upside. And this is just the ES, right? Now let's go ahead and take a look at the 30-year bond. So this is the 30-year bond on a daily chart. And you could also see that it's closed outside of the lower level of the Bollinger Band. So I like to look at the 30-year bonds and everything like that when we're extremely overextended algorithmically. And one of, this is one of those cases where we're extremely overextended to the downside algorithmically. So this is a good sign that equities and the stock market in general are starting to get overextended to the downside, and they're due for a small bounce. All right. So yes, the 30-year bond can continue to go lower like it did back here in June. But eventually, as it starts to even out, support gets created, and then we end up ripping to the upside. So we have to see, based off of what happened prior in June and other drawdowns when we did become very overextended to the downside. So we can look at what happened in the most recent 2 instances. So mid-June, right? So what we're going to do is we're going to look at the dates of when the 30-year bond was this overextended recently, trading outside the lower B bands, and what the stock market did in response. All right, so we're going to look at early May, and we're going to look at mid-June. So now here's a chart of the SPY. So early May and mid-June. So this is early May. We basically had a small pop, but then a failure to continue upwards. This was that pop from CPI data when we had that, famous pop to 430, and then we fell down lower. So we did end up skyrocketing a bit based off of the bonds, and then we went to mid-May. Sorry, it was mid-June. So you can see that in mid-June also the SPY was trading outside the lower B bands. We were overextended on the SPY. That's one of the most important things to look at here. The SPY was also trading overextended to the downside on the Bollinger Band, similar to the 30-year bond. So this signaled a bit of a bottom, similar to what happened on the bonds as well. So that was the closest thing and recently of what happened in correlation for the 30-year bonds and the overall market. So obviously, when looking at the 30-year bonds, this isn't enough to blindly become bullish, all right? But it's our job to look at many different factors, put them all together, and with that, then we can create a thesis, right? So the fact that we are this overextended to the downside, it's a good sign that eventually, most likely what's going to end up happening is there is going to be a small bounce, right? If you are trying to start to short the market now, you're hoping for momentum to continue to the downside. And if you are hoping for momentum to continue to the downside, you should not be entering with a heavy position, because algorithmically, when we are this overextended to the downside, the odds increase for a bounce. Therefore, if you position yourself too heavily when things are already this beaten down, with the odds increasing that we'll have a bounce, if you enter heavily, then the odds of you losing money also increases. So you have to just be careful about your position sizes after a downward move basically already happens. So not to say that we can't continue lower, but that's the whole point. You need to basically enter with an intelligent position size and be cognizant that the market could bounce, and you need to have basically money left over to re-enter on shorts at different levels of resistance as we bounce back up, ideally. All right. So we can see the 30-year bond is also showing weakness here. Next, we can see the dollar on a daily chart showing a lot of strength, and it's clearly trading outside of the upper level of the Bollinger Band. So basically when the dollar is trading outside of the upper level of the Bollinger Band, it's a good signal that the market is very overextended to the downside as well. So as the dollar begins to show weakness, that is generally a good sign for the stock market for a bounce. And since we are this overextended to the upside, the odds become ever increasingly likely that this rally on the dollar cannot sustain itself. And as the dollar gets a pullback, the stock market should have a bounce. Does that make sense? So if the dollar ends up having a bit of a pullback, that's going to be bullish for the stock market. And since we are trading outside of the upper level of the Bollinger Band, algorithmically overextended to the upside on the dollar, it makes sense that soon we will end up having the odds become likely as we continue showing this extreme amount of strength that there is eventually going to be a pullback. All right, so that's that for the dollar as well. So we already saw on the 4-hour chart that the ES was at a falling wedge support. All right, so now let's go ahead and take a look at the SPY. And the SPY is at major support as well. So 421.50 to 422 is the major level of support to the downside immediately. Below that, obviously the psychological 420 level. And then below that, 417.50, which is the level that we basically broke above and signaled this melt upwards from 417 to 432, basically. It would be very, very interesting to see if they bounced it off of 420 to 417 early next week. We could have an impulsive move below the falling wedge that might only hold for about a day or two, get people to become very, very bearish, and then rip it upwards. As people are aggressively becoming bearish as the market is falling, it makes sense for us to have a bounce to a level of resistance for people to re-enter into shorts. So my argument is going to be basically if we fall below 420 and we fall to 417, it makes sense that we bounce off of this 417 level and come back up to approximately 422 to 423 for a re-enter or for a re-entry for shorts, and then a continued move to the downside. I would be very, very shocked to see us just continue to fall lower, given the fact that the 30-year bond is also showing extreme overextension to the downside, given the fact that the dollar is also overextended to the upside. It just doesn't make sense that they would hinder the amount of profit they could make. They could chop out a lot of retail, so I don't see why they wouldn't want to do that. They could make a lot of money off of enticing people to go short when they should not. So yeah, I mean, my overall bias is I'm going to continue trying to buy dips at support. If we begin to really, really show weakness as we break down lower, then obviously you have to play bearish in the short term. But if I am going to be bearish in the short term, it's not going to be with a lot of size. The only thing that you should be entering with size is something longer term. So if you're bearish in the next 3 months, you think that we're going to end up breaking below 410 or 400 again, sure, get longer term contracts for a few months out for puts. All right, but yeah, so I hope that explains everything for that. This is the SPY. Let's take a look at the NASDAQ. So the NASDAQ, obviously, this is the first day since this uptrend that we closed below the uptrend, right? So obviously this is a very, very bearish sign. The NASDAQ is at 322 major level of support. It has that gap fill at 319. So again, the NASDAQ has multiple layers of support to the downside. You can see that the MACD on the NASDAQ is also oversold and the RSI is also sharply falling. So to have a bounce makes sense. So in the short term, the momentum of the entire market is very, very bearish. What happens overnight, what happens when futures open, and by the time the market opens in the morning, a lot can change. We can end up opening, negative 1% again. And that would set the SPY basically at 417. And that would set a lot of things right at support. That would make the 30-year bond extremely overextended to the downside. And then the dollar extremely overextended to the upside. So that makes the dip buying opportunity that much more enticing, in my opinion. So if we open up red, and if we continue to show a lot of weakness out of the 30-year bond and show a lot of strength out of the dollar, that is very, very exciting to me because that just increases the likelihood of a longing opportunity working. So yeah, hopefully that is the case because it would just make our job easier. So yeah, obviously the NASDAQ broke out of its uptrend. On paper, this is a really, really good short to get into for a few weeks out because usually that just ends up working. If you go short on the first day after we break an uptrend and you buy puts for 3 to 4 weeks out, they almost always work. So this is a solid trade if you were to enter on those shorts. In my opinion, this would be good. So yeah, there's that for the NASDAQ. Let's go ahead and take a look at the IWM. So the IWM has been one of the main leading reasons why the SPY is showing this much strength, right? So we can see that the IWM is also extremely oversold in the RSI and on the MACD. It broke below 200. It broke below 195. And now it's trading at 194.65. It has major support at 192. So everything is very, very close to getting to its major support levels. And Monday's open is going to be very, very interesting to see whether we're going to get a small baby bounce. If we're up 0.2 or 0.3%, in my opinion, on the stock market Monday morning, that is not very bullish. What will be bullish is if we can be very red. Because if we open very red, then we would be very, very overextended to the downside on the different securities and on the 4 hour on the ES, that a bounce would have to happen. But if we are slightly green, I would argue that that's not as bullish as opening very red. I hope that makes sense. So there's that for the entire stock market. What's also interesting is we should also look at Bitcoin on the daily chart. So Bitcoin, once again, this is a trade that you can bring anywhere with you. This is like, I talk about this all the time. When the crypto markets close outside of the lower level of the Bollinger Band, you can buy almost blindly. And a retest of that Bollinger Band is almost 100% likely. So the further we open outside of the lower level of the Bollinger Band on Bitcoin, on the ES, on the NASDAQ futures, anything, it almost always comes back and retests the lower level of the Bollinger Band. You just have to be cognizant that, like, you know, yesterday was Saturday. You just have to be cognizant that during Saturday, it could fall a bit lower, but the odds of the bounce back is very, very high. So you can see clearly Bitcoin bounced outside of overextensions to the downside, and now it's trading within the Bollinger Band once more. So let's see if they give people a retest of this trend line at 22,000 for a continued move to the downside. But the fact that the 30-year bond is very overextended to the downside, and everything else that I shared with the equities and the dollar, this is a good sign that if the market in the stock market find support, Bitcoin can end up breaking above 22,000. And that would be very, very interesting because many people are now wanting to load up on shorts. Everyone is wanting to load up on shorts on pops. All right. So what is the best thing to do? The best thing to do for them would be to melt it up upwards through resistance. And that, I think, would catch a lot of people off guard because no one is expecting the market to bounce at these levels. Pragmatically, not a single person is thinking that the market is going to retest above 430 to 435. Because that is the case, now would probably be the best opportunity to bounce the market off of 417 to 420. And if they want to bring it to 440 to 450, now would probably be the time. And yeah, I hope you guys enjoyed today's video. We talked about the stock market, the bonds, the dollar, and the crypto markets. So today is Sunday. I hope you guys have an amazing Sunday. I hope you guys have an amazing end to your weekend. And we are going to start next week off strong, and it's going to be amazing. And I will see you guys tomorrow. Make sure to like, comment, subscribe, do all that good stuff. Go for a walk, get some sleep, get some good food, and have an amazing day. All right. Thank you.